Welcome to another episode of ETF Central. I'm your host, Bilal Little. I got to tell you, today's episode is going to be one that you will not want to miss. We have Sal Gilbertie. He is the founder and CEO of Teucrium Investments. They're one of the most unique investment managers on the street. Historically, they've brought together really unique, hard-to-reach asset classes like commodities on the agricultural side. And today, I'm super excited because we're going to lean into one of the most innovative conversations around digital assets. So, excited to have him. Sal, thank you so much. Welcome to the show.
Happy to be here. Thank you for having
me. This is a long time coming. I've been trying to get you for a while.
It's been a while, yeah.
Your foot's healing?
My foot's healing. Dropped a cinder block on it. This is my first day with shoes since June 6th, I think.
Are you serious?
Yeah, real leather shoes.
Oh my goodness. Well, I'm glad you're back.
Thank you.
It's exciting. So, Sal, I think it's important to level set for us. We always want to make sure that our guests get an opportunity to explain who they are and a little bit about the firm or company that they manage. You got a phenomenal background, so I'm really excited to have you.
Okay, well, thanks. I started in commodities a very long time ago, trading oil for Cargill. And that was good fun. I think I learned more there than anything else, except probably reading the Wall Street Journal on my way to work every day. I learned more doing that than in school, really. But I had a long commodities career and was trading for SocGen, a renewable fuels desk, because I had brought the ethanol markets to fruition. They're swap markets, derivatives. I basically am a derivatives guy.
Okay.
And so someone called me and said, I have a client here. They were a broker downstairs, and I don't understand what they're talking about. And it turned out it was the guys launching USO.
Okay.
And so they had packaged oil in an ETF. And I thought that was amazing. I'd never heard of an ETF. I didn't know what it was.
What year are we talking?
Well, 2000. I don't know. Somebody can look up whenever that
Okay.
was. Early 2000s. Okay. And I didn't know what an ETF was, but I could never trade for my own book. If I thought oil were going up or down, I was trading oil and oil futures for somebody else. And it was a conflict of interest. So this guy's putting oil futures into something that trades on the New York Stock Exchange. I just thought it was the greatest thing I ever heard.
Yeah.
But I realized it could be done, I thought, better.
Okay.
And they launched a tremendously successful product, and it is a wonderful product still to this day for short-term traders. And people understand now the effects of contango and backwardation. The industry has matured. But in those days, Teucrium came out with a what we called next generation funds. Okay. And so we structured our funds to not just hold spot, to try to mitigate the rolling and contango and backwardation issues.
Absolutely.
And it was fun. We came out with oil ETFs.
Okay.
There was an oil ETF and a gas ETF. I think they were third and fourth to market respectively. Okay. And they were better structured. They did outperform. They were the best in their category for 2.5 years. And we didn't get a single create in any one of them. Wow. If you're not first in ETFs, you lose.
Okay.
And that's been my experience. What we were first at, and our first ETF, in fact, was corn. And I remember very clearly coming down here to this beautiful building, the New York Stock Exchange, and looking for tickers when I had the concept of the company was proven. We've gotten funding, and we were in the ETF process. And I said to Tom Champion, actually, I said, I wish you had, that was when the ticker was only three letters.
3 letters.
I said, I wish you had 4. And I said, well, you do. And I said, wow, do you have corn? CR? And I remember he got up from his desk, walked down the hall, came back and said, I have corn.
Oh, wow.
I said, great, I'll take it. And we went down the line with soybeans. Sugar was taken because I think of Sugarland, Texas. There were a lot of things.
So you went into the agriculture space?
We went to the agriculture space simultaneously with energies. The first fund to launch was our corn fund in June of 2010 here on the New York Stock Exchange.
Okay.
And that was good fun. Of course, I think we won an award that year for best ticker. I think the industry gave us an award for this corn fund.
Kept it simple.
Yeah, it was really good. It was good.
Okay, so just continue with that. So you went into the agriculture space. You went with corn. You said soybean, sugar cane.
Soybean,
what's
sugar,
the suite
wheat.
Look like?
Yeah. So right now we have corn, soybean, sugar, and wheat in individual funds. Those are our legacy funds.
Okay.
They trade very actively and efficiently on New York Stock Exchange. And then we started another fund because a lot of advisors would say, I don't know which one to buy, and they're all related. So we started one called TAGS, and so the ticker's TAGS, and that's Teucrium Agricultural Fund, Teucrium Ags. Okay. And it's just a fund of funds. So it is 25% each of the prior 4 are legacy funds: the corn fund, the wheat fund, WEAT, the soybean fund, SOYB, and then the sugar fund, which is CANE, CANE.
Okay.
And then we came out, we wanted no K1. So a few years ago, we came out with TILL, like tilling a field, TILL. And it's the same thing. It doesn't hold our other funds. It just buys 25% each exposure in using derivatives of corn, soybeans, wheat, sugar for people who want to allocate to the ags, which is a great allocation product. And people trade them as well when they're in the news, obviously.
Sure. So I just want to make sure we get a clear picture of Teucrium, because I feel like you guys do a few different things. Provide a clearer picture of who Teucrium is, because it's more than just these institutional products that are now obviously tradable to retail as well.
Sure. Teucrium's an ETF sponsor primarily that is a derivatives-based sponsor. So we're experts in derivatives. We know what to do. So we're not limited just to agriculture, as you know. And we've filed for Bitcoin funds, which were successfully approved and launched. We obviously have an XRP leverage fund here on the exchange, which is very successful. We also have a white label business where we're giving out advice. People would call and say, I've got this ETF idea. And then they'd call back and say, can you help me with it? And we always said no. And then it turns out that there's a big demand for that now. So now Teucrium has a white label shop internally, and it in essence uses up our excess capacity. We have a lot of really good people, really good expertise. Teucrium's a family. We have good team at Teucrium, and they know their stuff. And so now anybody who wants to launch a white label, an ETF, can use one of many white label firms. We're one of them, and we have that's growing very, very quickly.
So I want to make sure I understand something. So the specialty obviously is commodities. I mean, you guys have done that, or derivative products, really, really well. You've transitioned into digital now. When someone comes to leverage your white label, are you also doing traditional equities as well?
We will, yes. Okay. Yeah, we'll do. There's pretty much nothing off limits for us.
I like that. Innovation is in the blood, huh?
Yeah.
Okay,
That's what's fun.
It is. So, okay, so you built products historically for yourself, which was an institutional investor. Obviously, over time, you actually have adoption of the advisors, you have adoption of now self-directed investors who want to invest in these various asset classes. In your opinion, how has your particular business changed to now start to market these products and or speak to a wider range of potential investors?
Well, that's a great question. When we first started in this business in 2010, the primary way of marketing was you had a sales team and you had a force and the old call up a firm. Can we come and talk to you? Well, are you on the approved list of people who can come talk to us?
Right.
And if you are, and that in itself is a very difficult process. It's very arduous. It's, call the office that you want to visit and they'll set it up for you. And you call the office and it's all right. You can come, 4.5 months from next Tuesday and bring lunch for 50. And 4.5 months from that Tuesday, you show up with lunch for 50 and 50 people show up, 55 or 60 people show up for the free food. And half a dozen will stay out of courtesy and one will stay who's really interested. So it's a really inefficient model for an upstart. For existing firms who've got, groups of a dozen or 50 or 100 salespeople who have existing relationships and they're making those rounds and they've got products, a very full product suite, a very wide product suite, because part of the trick is not just the relationship. I think when a salesman walks into an advisor's office, they're carrying still that briefcase and there's, 800 sheets of paper in there for whatever fund is in the news that day, because that's what matters. Okay.
So, I was a wholesaler for a long time.
No,
I was a wholesaler for over 15 years.
Okay.
So I carried the bag. I know exactly what you're talking about. And to your point, like depending upon what you have and what's the sizzle, you're right. Only a handful of products will come out of the bag.
Headlines matter. And so we stepped back and said, all right, we tried hiring a couple salespeople. And the key in the sales world is that real salesmen are really good at selling and they're really good at selling themselves. But if they're looking for a job, that's a problem. You have to find a unique situation where a firm downsized for a reason and they had to let good people go. Otherwise, good salespeople make a lot of money. They're very successful. They have a good thing going. They don't leave. They just don't.
True.
So it's hard to hire them. So, but anyway, social media is the future. As you know, that's why we're sitting here. Okay.
Absolutely.
That's the audience now. It's easier. I think the internet, more than that, social media era of the internet has changed everything. And that's the last 10 years, really. And so that's, Teucrium's 16 years old last week, I think, from when we incorporated, and our our 15-year anniversary just went by with corn.
Yeah.
And so, we've been around a while. We know our stuff, and you've got to change. You have to innovate. That's the only way. It's why we come out with different products. And the marketing is now social media, internet based. You can cover a lot more ground and go to where the action is. Go to what the buzz is right away. Away. The pivot's easy.
The search feature of social media is what's really continued to evolve and disrupt a lot of businesses, right? So I want to unpack that in a moment. Let's just talk about just exposure to commodities. I think this is an important conversation. Historically, to your point, like it's been an institutional play for most people, but now, just given what inflation looks like, investors almost should really consider allocating and or at least thinking about what commodities could do for their portfolio. How are you having that conversation with investors?
Well, we're trying to get the word out that, stocks, people don't realize stocks don't always go up. The new generation of investors, they just think every pullback is a buy, and it won't hurt you. And, at some point that will change. And even if it doesn't, I think people hit a certain time in their life when they want less volatility in their portfolio. And that's not necessarily when you have to go to more cash or you're not going to, you don't have to worry about putting money in things for the long term. But agriculture, well, first off, commodities should be in everybody's portfolio. It's why I got into the business. I'm a simple guy. Stocks are really hard for me. There's a lot of complexities. Commodities, there's either enough or there's not. Okay. So in some commodities, there's a supply surplus. They go down. In some commodities, there's a supply deficit. They go up. Demand, by and large, is rising all the time for commodities because the global population is going up. More importantly, the global middle class is increasing. And as people get more money, they buy more commodities and use more commodities per capita. And the interesting part is that commodities, particularly ags, trade at their cost of production in a natural state when there's enough, because producers will just stop producing when they're losing money.
Absolutely.
And so you do tend to have a floor on most commodities.
Okay.
Granted, oil went negative famously, and that always comes up, but you can't just shut an oil well off. It is often more productive and more profitable for an oil producer to pay someone to take their oil away for a short while than to risk adjusting that well and losing it, which is possible. And most people don't understand that about oil. But in agriculture, for instance, a farmer will just plant a different crop. All right. Okay. Farmers are also subsidized in every country of the world because every country needs food and every country wants its people to be happy and well fed. My personal opinion why I got into commodities is that the last thing any of us want to do is let ourselves, our families, our friends, our animals go cold or hungry. So if you're not in energy and food, I think you're missing out. It's just foolish not to be. And especially, when crude oil goes under $40 a barrel, it's astounding the tens of billions of dollars that flow into ETF products that are related to oil. When corn goes under $4 a bushel, that doesn't happen. And it really is analogous. And so I think the more people that understand that, the more opportunity there is for them to diversify their portfolio and have surprises to the upside. Okay. Historically, since 2007, the Renewable Fuels Act, which reset all agriculture prices. Okay. Corn has doubled from the $3.50 to $4 area 3 times in 17 years. So if somebody says to you, I have an asset that goes to the same number and sits there for a while and then doubles and then goes back to that same number and then sits there for a while and then doubles. It's done that 3 times in the last 17 years. You're going to say, you know what, next time it gets there, let me know. Well, that's corn. Okay. That's corn.
Why do you think people spend so much time looking at oil and gold or pure commodity exposure and not ag?
So that's a great question. I think that you're turning your thermostat up or down, or you're filling your car up with gas or now electricity.
Good point.
Okay. I think gold's a visceral thing. It's, throughout history. But guess what? So is wheat. Wheat's mentioned like 53 times or something in the Bible. Like, people should be thinking about it. And when Russia invaded Ukraine, our wheat fund here on the New York Stock Exchange went from 80 million to 800 million in weeks' time, multiple weeks' time. Headline, right? Back to what's going to sell. The headline, everybody wanted wheat. And what did it do? It went right back down. Like, it took 2 years to go back down. And we went back, it bounces around with drought. That's probably 99 times out of 100 a bull market in ags is because it doesn't rain somewhere. Okay.
Wow.
None of us are going to not eat our New York bagel if it
you.
doesn't rain in Kansas. Now that's a lot of negatives, but
Yeah.
you're going to keep eating your bagel even if Kansas gets no rain.
Yep.
And that's the key. So what's going to happen? The price of wheat's going to go up.
Supply demand dynamics.
Supply demand is easy. Commodities are easy to me because of that. It's a very simple equation.
I love this. So now let's kind of pivot the conversation. This is probably the most innovative aspect of, I would say, society when it comes to digital assets right now. There is no topic hotter. You guys have been innovators throughout your history, right? I want to talk about where you decided to get into the digital asset space.
Sure. We saw Bitcoin futures come out, and we'd been following Bitcoin.
Hold on, origin story right now.
All right.
When did you first hear and learn about Bitcoin?
Bad story. I was told by a computer guy at the bank to buy Bitcoin, and I asked him what it was, and I thought it was a great idea.
What year?
He was working on my computer.
What year?
I don't know, but Bitcoin was 25 cents. And he said, if you give me $100, I'll buy you 400 Bitcoin. And I said, well, tell me about this again. And he did. And I said, so you're telling me I'm going to have this thumb drive. In those days, that's what you put it on. And you're going to give me this 26-digit code that I'm going to forget. And I'm just going to waste my $100 with you. So no, I'm not going to do it. I'm either going to lose the thumb drive or lose the code. And probably true. I probably would have lost it anyway, but I don't have it.
Absolutely. Okay, so that's the origin story. Okay, so when did you decide to launch a product?
When futures were announced, because we're a derivatives shop, we understand futures. As soon as Bitcoin futures came out, we, along with many others, filed for Bitcoin futures-related ETF. I'm not sure we were the first. We may have been, but there were a slew of filings. And the SEC almost immediately asked everyone to withdraw, which we did.
Yep.
And their basis for the ask was that futures weren't liquid enough. That's what they said. Now, there was still the ongoing debate of who's going to regulate, how are they going to regulate, what's the visibility. We knew that if we just watch futures closely enough, everyone else, when the SEC asks you, government asks you to do something, you pretty much do.
Yeah, for sure.
And then you get a little gun shy. Okay. So we knew everybody else would be slow to watching, but we're really good at watching futures and derivatives. So the moment we thought that futures contract met the criteria for liquidity that the SEC would also see was acceptable, we refiled. Now, in those days, you did it with a 33 Act wrapper because that's what you fit them in.
Yep.
That kicks off a 270-day process. And we did that in either late April or very early May of whatever year it was.
Okay.
And in August, Gary Gensler gave a speech that said, why doesn't I think it's okay for everybody to file under a 40 Act to hold. And that sets off a 75-day clock. And so we were not prepared for that. We missed out on being the first Bitcoin futures fund. It's still around. It's a very successful fund. God bless them. But that was a burn that we didn't appreciate. Now, that said, we had invested the time and money in the 33 Act filing. We left it in and we got it approved. Okay. And what that did was open the door for Grayscale's lawsuit against the SEC, which they won on the basis of that, our approval, our 33 Act Bitcoin approval. That fund did launch. We eventually sold it because it would have been, 12th or 14th to market and harken back to, you have to be first.
Early,
We sold it. So we kept watching. I'm not an Ethereum guy.
Okay.
Didn't know much about Solana. Still not an expert, I wouldn't say. But I do have many friends that are XRP, members of the XRP army, they call it.
Absolutely.
And I joined them, and I think XRP. I believe
enlisted,
it.
Huh?
I believe it. Okay. In XRP, I believe in the use case for the Ripple ledger. Okay, let me put it that way. And obviously, XRP is an integral part of that.
When look, I feel like XRP was an acquired taste.
Agreed.
When did you realize that it was an important technology?
Probably not long before we filed, whenever the filing was. Okay. Because once I realized it, well, actually, that's not true because we had to wait for futures to be announced. So I did realize it, but I couldn't figure out how to
access it the right way.
Yeah. Exactly. Thank you. And so once futures were announced, okay, and I think both CME and Coinbase announced futures, and we filed. We filed immediately because you have to be first. You just have to be first. And
even with the lawsuit, even with all the headline risk,
didn't care because that had nothing to do with a derivatives product being listed in an ETF wrapper. Just doesn't have anything to do with it. You can still do it.
Yep.
And so then we're saying, well, how are we going to be first? Okay. Because many people filed for XRP ETFs. And that's where my derivatives and swap background came in.
Yep.
So we structured a swap around an XRP fund trading in Switzerland. And we got a bank to give us that swap. We packaged it inside, and we met all the rules, checked all the boxes.
Yeah, for sure.
And I want to be clear: the SEC is here to help. Okay, and the new SEC is actually really here to help digital.
Yeah, absolutely.
And the difference is the SEC is always there to help. They're always there to check the boxes. We have the safest markets in the world for a reason.
Yeah.
But the SEC, because of the leadership, at the time, was adversarial to most crypto.
Yeah.
And that's gone. And that's a really good thing. It's a big relief. And of course, now we see the tide turning in Washington.
So XXRP, explain exactly what it is. And
sure. It's a 2x levered fund. And we knew that would be great demand and less competition to go levered versus unlevered. Also, there were futures capacity constraints. We knew there would be great demand for the funds. And if we filed for both and listed both at the same times, we would hit futures limits more quickly.
Yeah.
And which, what do you do? And so we decided to go with the levered fund on a strategic decision, which was in hindsight very good.
Sure.
And it's a great ticker. I mean, double XRP exposure, XXRP is
as
the
simple
ticker.
as it gets.
Yes.
Right.
And so being first with the right ticker, we learned that with our corn fund. It's a big deal.
Absolutely.
And so we made it with the swap.
Okay.
And then once futures came out, in fact, we started using Coinbase futures first.
Okay.
Coinbase, while new at the game, they've been tremendous. I should give them a shout out. I mean, Coinbase as a futures exchange has done what they said they were going to do. It has been really marvelous working with them. Yeah. And we're obviously big supporters of Coinbase. They've done a wonderful job on their futures. And we support the CME as well.
They've been a big advocate for the industry.
Advocate for the futures industry in general. Futures are really important. It's been my whole life on futures. And the CME came out with a bigger contract. And they're, of course, the big dog in the room when it comes to commodities derivatives. We're obviously enormous users and supporters of the CME on their agricultural products. And we're supporting them on their derivatives products for crypto.
Okay.
And so the fund trades really well. It's got a lot of liquidity. There's
you had a lot of early success.
Very early success. Has options on it. I mean, it checks all the boxes. But what the fund is, to your question, is it's a 2x levered fund, which investors need to understand. A levered fund has to reset every single day. So the investment objective of the fund is for each day, each single day time period, to match as closely as possible 200% performance of the underlying instrument, which is XRP futures, basically. And the futures go with XRP. So understand less fees, expenses, and whatever market static there is to get the execution done and pricing and things like that. You should get each day approximately 200% up or down on your money. But at the end of the day, because of the change and because of the way the math works, we have to reset for the next day. So this is not a buy and hold product. I have to be clear. It is an aggressive trading product. People may choose to do with it what they wish. It is designed for single day time horizon, aggressive trade.
I'm glad you said that. So right now, this is not volatility, but the traction that you see is obviously within the trader market, which is exactly where it's supposed to be.
Correct.
That's right.
Okay.
Do you see the advisor community and or the wealth management space embracing or adopting the product?
Yes, we do. And I actually don't want to comment any further than that just because it is designed to be a trading product.
Okay.
But we are hearing from investors of all kinds who have tremendous interest in this product. Now, it's their choice to use it however they wish.
Okay.
But it's designed for 1 day time horizon, short-term trading.
What's the feedback you've been hearing on the product so far?
Amazingly positive. I mean, we run into people all the time who say, I trade that product. I love it.
Wow.
So we're really, really happy with it, truly.
Okay. I like that. Let me ask you a question. This is a bit of a pivot, but there seems to be an unwavering level of belief and understanding of the company Ripple. Right? I just want to get your sense on this. And because you have a derivatives background, this is important. And let me try to level set this. Historically, in traditional equities, if I want a competitive edge in a specific area or asset class or sector, I'm talking to the management of these companies. And I'm going to sit across from you as a potential investor and say, look, I met with the portfolio management team. This is what they're doing. Here's where they're investing. With derivatives, you're technically not getting that access, or do you have that access to the Ripple team to understand what they're doing long term for you to somewhat communicate that value and your thought process on the continued success of this product? Does that make sense?
It does.
Okay.
I don't think we have any more or less ability to connect with the Ripple team. I mean, we can, but I think a lot of other people can too. They're communicative people.
Okay.
And I get your point, but look at the products that we are issuing are they are so people can track and participate in the price movement of a particular item. This happens to be XRP.
Yeah.
XRP happens to be the token that's Ripple's token, but they have RLUSD. I don't want to speak for Ripple, okay?
Yeah, for
but
sure.
they have a mission which is essentially moving money around. Okay. And they're going to be able to do other things as the ledger builds out. And they are doing other things the ledger builds out. When you go to a conference, the number of people that are there who aren't just token owners, but they're actually programmers. They're people that are using the ledger and developing the ledger. That's not unique to Ripple, I don't think. That's the whole blockchain environment and ecosystem. And so I think that people who have those questions should contact Ripple and ask them. They're there and they're answering questions. I think as far as anybody can understand what's actually going on in a ledger who's not a computer geek, that's where the problem comes in. Right? It's hard for any of us to get it. What I get is price movement, derivatives, how they behave. And I'm a big believer in the XRP token is going to have a massive use case.
Yeah.
But where that goes and where that actually will take the price, I don't have a clue.
Yeah, no, look, I think, what's going on in cryptography is important in the sense of the internet was built without security rails in many cases. And every single day, if you look on the news feed, there's some sort of hack, there's some sort of security issue going on. And we're talking about better accounting, stronger security, and I'd say better clearance, if you will. If that's the technological upgrade that we get with the information of data that's moving in anything, I think that's a good thing.
I think you're right.
Right? I think that's a good thing.
Absolutely.
So for me, the reason why I sort of got on the crypto trade was I read a white paper from the World Bank Group a number of years ago from 2015, and it was called Sandboxes, where basically the largest banks got together and they outlined geographical areas where people can actually go out and test their technologies. And the technological test was security, identification, KYC, AML, transfer of payments, all of these things to bring a stronger financial ecosystem together. So for me, that's where it was, and that's where it made a ton of sense. And I feel like when you read what's going on with the XRP community, they're sharing a lot of that particular information, not just obviously focused on chasing price.
I think there's no doubt about that. I think the XRP community is more holistic than you might think when you come in, because they are looking at exactly that. And you bring up a good point. KYC, that's been brought up to me in a lot of meetings with some very serious investor type people who are looking at this. And they all say, things aren't going to move as fast as everybody says. Even if Ripple somehow replaces Swift with its own technology, the banks are going to slow it down, not intentionally, but KYC is important. Critical. All right. And that's really critical. And that will slow things down, like it or not. Now that brings up the whole, digital DNA talk, which, is really cool and really creepy all at the same time. So, that can,
we're already
you can
in a
go down the
state,
road.
right?
Yeah. But it goes even beyond that, I think. And so, talk about security and paranoias and things like that. So, I think you hit right on it, but bringing up KYC, most people don't talk about that. And that is why things will go a little bit more slowly than you think. Yeah.
Well, let's kind of put you on the hot spot. What else are you looking at? Are you excited to potentially launch any new products in the space?
We are.
Okay.
We're, of course, not allowed to talk about it ahead of time. But I think what we'll look at doing is more customized products. There's a lot of different investor needs that can be fulfilled. And that's what we're looking to do. So any products that Teucrium itself comes out with will be to fulfill the perceived need. And of course, our white label will come out with a plethora of products that are serving all kinds of different purposes, but they're not ours. And that's one of the reasons to be in white label is we don't have to have all the good ideas.
That's true. That's true. So look, this is the point in the conversation where I get to where I ask, in your lineup of ETFs, is it 9 today? 9 active?
I believe so.
Okay, I believe 9 ETFs. What's one product, what I call the underdog, that people don't own enough of or they haven't looked at enough that they should be paying attention to?
It has to be one of the ags. There's no question. I'm a corn fan. Most people tend toward wheat, but corn is, if you just look back historically, and this is not a price recommendation, it's not a prediction, but historically, looking at historical patterns, corn gets back towards that spot price of $3.50, under $4 a bushel. And it goes sideways for a while, but then it explodes higher on the year it doesn't rain. And so, it's why wouldn't somebody put just a piece of that in their portfolio? And it's very seasonal. During the North American harvest, peak harvest time is literally the week before and after October 1st. So last week of September, first week of October, end of the quarter, beginning of the quarter, whatever people like, to look at the price of an ag. And if it's trading flat sideways at a long-term level, look at a 5-year chart, a 10-year chart, a 20-year chart, okay? Going back at least to 2007, when in the new era of ags here in the U.S. When you see that base price hit there, that's, to me, you're going to park some money that's not going to earn you a dividend. It's not. That's part of the problem with these things, okay? People are chasing dividends, chasing cash flow, chasing weekly and monthly distributions. That's not necessarily the best thing to do. It's also not necessarily a well-balanced portfolio. So if you want some stability, I would look at ags when they're trading towards their cost of production during harvest time. That's a good time to consider speaking with your financial advisor, making a proper decision of, do I layer some of this in? I mean, we tell this story often. We had a financial advisor come to us and he said, I wait for exactly what you just described, W-A-I-T. Then I weight corn into my portfolio, W-E-I-G-H-T. And then I wait again for the drought and then I get out. And he said, it's worked marvelous for me because I put 1% of my portfolio in your corn fund. If corn goes down 10% from there, I've lost a tenth of a percent. It means nothing and I'm diversified. Wow. On those years that corn doubles, and the ETF may or may not double, okay? I'm going by spot corn. He said, now my 8 or 9% target portfolios turned into a 9 or 10% target portfolio. My clients are happy. I'm happy. He said, I love this. So we said, do you mind if we use that? Wait, drought out. It's just a fun slogan. But I think ags are underrepresented in people's portfolios. They don't think about them enough. And they do have patterns that are historically visible. I don't want it. They don't, past performance is not indicative of future results, whatever to say. But yeah.
I like it. Sal, thank you so much for joining. This was really helpful.
It's a true pleasure.